how wrong the analysts have been on almost everything, and how or how ignorant, because we have sat here and not heard anyone ring the bell. Basically, maybe a couple of IPOs.
There have been very few,
and yet you get a line about investment banking and it's weak, and you say to yourself, well, what were they thinking? How about if you just take it to zero? Would have been better. David, one of the things that JPMorgan, I think, uniquely did was confirm the hurricane thesis, and that does matter.
On the press call, we've been listening in, of course, on the analyst call. But on the press call, Jamie Dimon spoke, I think, more than he did maybe on the analyst call, certainly to that point. Of course, we're referring to his comments last quarter, or actually it was after it was during their analyst
yes,
day.
It was not the actual, right. It was the analyst.
Where he talked about a hurricane, but not knowing the strength of that hurricane and whether it was going to be a devastating one or whether it was going to be milder. He said, I haven't changed my view at all. The negatives I pointed out, the risk in the future are still the same risk in the future. They're nearer than they were before. And you already have a little bit of the bad effect in markets, which you've already seen. And then again, Mr. Dimon going through the potential outcome ranges, soft landing to something much harder. You can put any percentage you want on it. I've never changed my view where we're going to be prepared for and serve our clients. He says he's not guessing. He's just talking about possibilities and probabilities, not about one single point forecast.
Well, I felt very at sea when I read it. I've confirmed with the numbers, Carl. When I got through it, and then I saw Morgan Stanley's, I felt Morgan Stanley was much more cut and dried, somewhat positive. But JPMorgan, if JPMorgan sets the tone for this earnings season, then we are going to have that the declines that we're hearing from some of these strategists, which is that we could go down very significantly. I don't think JPMorgan represents the consensus, but Citi's price started. Remember, Citi cut down let's just put it this way. A lot of the analysts, the strategists, are looking for down 30%.
Sure.
And JPMorgan made me feel like, holy cow, it could happen.
Jim's referring to, I think, B of A today.
B of A. Very bad.
Cuts. She was at 4,500 year end. She goes to 3,600 and says you could visit 3K, 3,200, somewhere in there.
I read that and I said, this is this new thesis that we're hearing, which is that in a recession, you go down 30% from the top. That's what happens. And that we're going to be in a recession. And I felt with Jamie Dimon basically said, listen, it's coming. And in a recession, we're not down enough. 21% is not down enough. So, I mean, now we got to start thinking about what happens if we start building in that.
Well,
and the answer is that we're going.
JPMorgan's getting ready for it to a certain extent, right?
Yes, that's what I felt.
They did put more in reserves, another $420-some-odd million.
That's what
Actually,
I felt.
obviously, that compared to a reserve release of, I think, as much as $3 billion in the quarter a year ago, which obviously also changes the comparisons greatly. And they stopped their buyback. As well, Jim.
Right, but I mean, I do think that the stopping of the buyback is somewhat technically related to some of the regulatory issues with the Fed. But it stuck out as being we're stopping the buyback because things are getting bad. And I read it's like stopping the buyback. There are some tests coming up, but it read terribly.
Well, he's going to continue to say, of course, fortress balance sheet and overcapitalized, which
great. Fortress balance sheet 165 to 108. How much is it's for the patch? It's Custer's last stand, man.
But Jim, to be
Custer
fair,
was a good general.
The stock didn't really go up on good earnings either. So,
well, I just think none of.
When they've had them in quarters
we were always
past,
waiting for the
last
net interest margin to expand. Net interest margin is going to expand greatly. Suddenly, we don't care at all about that. Yeah, I mean, I would have led with that if I were a banker. I would have said, listen, our net interest margin is getting better.
Yep.
At the same time, we have to boost our credit, our possible credit losses because of that. But right now, it looks like that there could be a peak in inflation. They didn't have the PPI number. The PPI number was actually okay. Not great.
Right.
Better. Yesterday's number was.
No, nothing. I'm agreeing with you. And
you are?
Yeah. And then I was moving on to Morgan Stanley numbers, too, because
I'll take my tie off to agree with you.